Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Tega Industries, that's the stock in focus in the back of fourth quarter numbers. Revenue growth and margins surpassed the FY24 guidance, that is for the FY24 numbers. Net profit rose 16% on a YY basis. Mehul Mohanka, the Managing Director and CEO of the company, is joining us now to take a few questions on the quarter gone by and the outlook going forward. Mr. Mohanka, good afternoon. Thank you so much for joining us. Well, I wanted to understand, you have surpassed your guidance for FY24, both in terms of revenues and margins. First, what led to that? And second, are you being a little conservative when it comes to FY25 guidance, 15% in both your segments? Do you think you can do better than that? What are demand trends looking like?
Thank you very much for having me on the show. So I think nothing extraordinary happened for us during the year. We just continued to execute our strategy in terms of not only our new product innovations being deployed across the world, but customer acquisitions and penetrating markets which we had planned for over the years. So that kind of played out for us to be able to deliver the kind of growth both in top line and margins as we did. In terms of our overall guidance, we've always maintained 15% growth in revenue year on year going forward, and we've done that not more out of conservatism, but making sure that we always exceed the expectations of the market. And we continue to believe that the way the business is poised, 15% is where we see our markets to grow from here on.
Mr. Mohanka, welcome to the show. You ended Q4 with EBITDA margins of slightly northwards of 27%. The guidance that you've given for FY25 is slightly underwhelming. You've also, mentioned, various worries that you're facing, especially in terms of inventory that you've had to carry due to the Red Sea crisis, etc. So are you being conservative once again as far as EBITDA margin guidance is concerned?
I think what you're looking at specifically is the results of Q3 over Q4. But if you look at the entire, margins for the year, we've always guided that we'll be between, 21 to 22%, and we've been at about 22.5% for the full year. So our guidance is not off, actually, if you look at from an EBITDA margin perspective.
You've given a 20 to 22% guidance, right?
Yeah, and we did about 22.5 if you look at for the full year, of 24. So,
okay.
So as I was saying, so 21 to 22% is completely where we're at the next year.
Correct.
For 25.
So 27.4%, what my colleague meant to ask is that 27.4%, that was the quarterly number that you saw in quarter four. That is not something that would be replicated. And also, what is the quarterly run rate for revenues that you're looking at? Generally asking because 507 crore rupees, this is at a multi-quarter high. Till last year, you were averaging at around 300 crore rupees on a quarterly basis. So do you think that revenue growth would come with higher margin expansion? Would that happen going forward?
Yes, our margins are going to continue to expand. If you look at Q4 in particular, but came off of a subdued Q3, so we had mentioned in one of our calls earlier that we, because of the logistical reasons, we had a bit of a subdued Q3 and we would make up in Q4, and that's exactly what happened. It kind of spilled out over from Q3 to Q4, leading to the numbers as you see of 511 crores on Q4.
Okay, just moving on, talk to us about the Dyna Prime lines range. You've mentioned in the call that it's progressing as per what the internal aspirations were. Can you quantify it for us, FY25? What is the outlook from that particular segment?
So Dyna Prime for us has been growing at about 28% to 30% year on year, and we see those estimates to continue to flow through into FY25. We see some kind of an improvement going into FY25 because the product continues to gain a lot of traction globally. So Dyna Prime is going to be one of our mainstay products driving growth, along with other product lines that we have that we've been working on as well as Tega McNally, which is coming back strong in the last year because of the turnaround.
Okay. I wanted to talk about the Chile expansion timeline. You said you will be starting the construction of the project very soon. It will be completed by June 2025. What is the kind of capex you've made here and what is the asset turn on that? And once it does come on stream, will the margins improve? What kind of financial change will it bring it to your books?
Yeah, so we're going to be spending about close to $30 million in the capex. It's a greenfield project. It will come online by I would say, end of Q1 of FY25-26. We see that delivering an overall growth of about $100 million at full capacity. Of course, we will ramp it up over the next few quarters once we go into commercial production. And Latin America itself has been a good market for us. A lot of growth is being delivered through our Latin American customers, and I think margins will continue to be sustainable at the levels that we mentioned, about 22% and 21 to 22%, and that will come through the expansion of capacity as well.
Okay, let's talk about the order book and the order inflow. Order book currently stands at around 630. It was around 480 at the end of last year. So what is the order inflow pipeline looking like? Where will you end FY25 at? And also, if you could give us some more specific in terms of name and, what is the kind of revenue potential from the large European order of around 690 crore, spread out over the next 5 years. Could you give us more details on that in terms of the revenue potential?
Yeah, sure. So as of March 24, we ended the quarter with an order book of 630 odd crores. And the same period last year in 23 was 480. So order book has grown over 30% for us in FY23-24. We continue to see the trend going forward. We have been, as you were aware, that of the large contract in Europe, it's a copper mining company, and we will see those revenues starting to come through in this year itself, and starting Q1 of this year. And it's a 5-year contract, so there are customers similar in size and range that we are in discussions with to see if those similar contracts can be replicated.
From that particular order,
Right.
Would you be able to quantify quarterly, the approximate amount you would be able to book?
I think estimates are around anywhere between 30 to 40 crores a quarter.
Okay.
Okay, all right.
Revenue will fall through.
Okay, all right. And last question before we let you go, wanted to understand the update on trade and export situation. We've been seeing a lot of volatility in geopolitical, due to geopolitical concerns. How much is export as a percentage of revenues? Are you seeing freight rates going higher or pricing change because of that, or orders getting moved to, say, the next quarter or getting delayed?
Yeah, so supply chains have been impacted because of the geopolitical issues. We're not seeing as much stress on the pricing of freight, but we are seeing delays in terms of shipping times. For example, Europe would generally take us about 6 weeks. Today, we're sitting at close to 12 weeks of shipping time to Europe. So those are some concerns which could lead to slippages of revenue from one quarter to the other. But in terms of cost, we're not seeing as much stress as of now.
Okay. All right, Mr. Mohanka, thank you so much for joining us today and giving us all those details. So that's the word coming in from Tega Industries. Very strong Q4. They have also surpassed FY24 guidance, and they're expecting 15% revenue growth in FY25.